Hello everyone, welcome back to Eddie the Insurance Professor. We're here to understand insurance. Today we're going to talk about common mistakes in insurance. Basically, what are those mistakes that we usually make when we're buying insurance, or when we really bought insurance only to realize that we've made a small error which can quite be costly. One of it is underinsuring or overinsuring. Sometimes you find that, I'll give an example of a car that is being bought or cost at the market at around maybe 20 million. And then you realize that you have to pay a lot of premium. You ask, maybe they reduce the sum insured to around 18 or 15 million. There you're paying small premiums, but at the end of the day, you find that when you get a claim, your claim is going to be reduced by a certain percentage. Then overinsuring sometimes also is not helpful to all of us, because at the end of the day, for example, if the whole item is written off, the real pre-accident value or the accident just prior the loss, the value just prior the loss is what is considered. So at the end of the day, you find that you're missing out, or paying a lot of premium, but at the end of the day, it's not adding value. But don't forget to subscribe on our channel to keep learning all these. Then the other one is setting your policy excess too high or too low. You know, when these contracts are shared with us, they have what we call the policy excess, that contribution that you usually contribute to each and every claim. Sometimes it is too high, and then you can't afford in your pocket, you can't afford the policy excess. And then sometimes you request for a very high policy excess, which is really high compared to the policy that you're having. Sometimes you have to be really accommodative or looking at what you can really manage or what you can afford, because usually this policy excess is that contribution that you can afford to the claim. Then the other thing is not disclosing all relevant information. This can be at the time of getting cover or at the time of claiming, because in most cases you find that the accident happened in up country, and he's worried, he's thinking, oh, what is going to happen if I report the accident that it happened up country? And someone would say the accident happened in Kampala, only to realize when the assessor has been sent that actually the accident happened in up country. The vehicle is damaged and the claim can't be paid just because you misrepresented the circumstances of the accident. And then not disclosing material facts is also very grave. Then the fourth one is not telling the family about the life insurance. Sometimes we buy these things as a cover, as a fallback position for our family members when we are not there. And then you've bought insurance, you keep silent, and then when you die, no one can come to claim from the insurance company that you did, or maybe they need to get the benefits. Even though you put the beneficiaries, no insurance company will call you and say, maybe you come and they take you money. It is those people that you've left behind who would usually come and request for these benefits. But then if you not tell them, who will come, who will claim on your behalf when you're not there? So it's always very important to always let the people in our lives know that we have a life insurance. Insuring home for its real estate rather than the cost of rebuilding it. Sometimes we insure our homes on the market prices that are prevailing there. But honestly speaking, insurance is for rebuilding that house just in case it is demolished or accidentally damaged. So in that instance, you have to only consider the cost of rebuilding the house, not the market value, because now the market value you find that you have the land value and the thing, which is not necessary here. Here we're looking at the instating the item when it is accidentally damaged as a home. Selecting an insurance company by price alone. You know, price alone isn't really what we look at, because there are many benefits in the policies that we get from different insurance companies. So it's very key always to look at other details of the policy coverage that is being given, so that we don't only consider the price alone, because the price alone is a real mistake. And then ignoring the policy exclusions. You guys, sometimes at times when the teachers and you've had a claim, yet maybe earthquake is not covered in the policy. But then you hear saying, yeah, your house has been damaged as a result of the earthquake, and then you can't be covered. So always take key intentions into policy exclusions. It's always very key to always know the policy exclusion. Let us always review our policies regularly. That is also a mistake that most of us do, that we don't review our policies regularly. You find that the year has ended, the items have to be depreciated, and then you're insuring them again on the same value. You bought the vehicle 45 million last year, even this year you're still insuring at 45, even next year, a year after, is still on 45 million. You're paying at premiums which are not helping you at all. Thank you for listening. Let's always keep in touch. Don't forget to subscribe. Thank you, and have a blessed day.